In this presentation, we will consider control activities and tests of controls related to payroll and human resources. Noting that when we consider the tests of controls from the auditing perspective, we want to get an idea of the payroll and human resources process. Then we want to consider what the control activities are, those control activities that are put in place by management. Once we have the inherent risk and the control activities, then we want to test those controls, and the more that we can rely on those controls, the less we have to do then on the substantive testing, actually testing the transactions themselves. Now we're going to go through our assertions related to payrolls. Think about the weaknesses within the payroll process, what the controls are, and what the auditor would be most concerned about, starting with the assertion of occurrence of payroll transactions. So the auditor needs assurance that payments for payroll are being made to valid employees for time worked. So let's consider that again in a little bit more detail. The auditor needs assurance that payments for the payroll are being made. So obviously we want to know that the payments are actually happening, being made to valid employees. So that's going to be a key factor. Of course, one of the concerns we might have within the payroll process is there's somehow payroll payments being made, but not to valid employees. That's going to be a consideration for time worked. So of course, not only do they need to be valid employees, they need to be valid employees that did work and therefore are being compensated for the work being done. And again, you can imagine if you were going to set up some kind of problem or some kind of fraud set up in the payroll processes, then the paying of someone who is not an employee or paying someone who is an employee but didn't actually work are two kind of areas where you could see potential problems happening. Controls should be in place to make sure no payments are made to fictitious employees. So obviously we want to make sure that, again, no payments going out that are to fictitious employees, and payments to employees are stopped once the employee is terminated. And that could be a common type of problem. Again, if you're thinking about how would someone fraudulate the payroll process, well, maybe they would consider, maybe they could take advantage of a control not being in place when someone is terminated and somehow keep basically the employee as if they're on the books and the payroll still going to someone that has been terminated. So again, we want to make sure, of course, that when someone has been terminated, payroll has been stopped and those controls in place to make sure that that is indeed the case. Then we have the assertion of authorization of payroll transactions. The business should have controls for, with related to the assertion of authorization, hiring and terminating employees, setting pay rates, making withholdings, awarding benefits, and issuing payroll checks. So again, we're thinking about authorization. If you were considering how would someone cause problems in the payroll department, possibly they're having authorization that wouldn't be in place for these types of things, right? The hiring and terminating of employees, who's going to be the personnel that's going to be involved. There needs to be proper authorization process to go through that process. The setting of the pay rates, so who's going to be involved within the setting of the pay rates, of course, who's going to authorize the setting of the pay rates. That's going to be a key component as well. The making of the withholdings, want to make sure the withholdings have been done properly, including federal income tax, Social Security, Medicare, and then the awarding of benefits. So any kind of benefits that are going to be put in place, they could be very significant, these benefits. We want to make sure that there is authorization related to the benefit process and who gets awarded those benefits in accordance with the decision-making process. And then, of course, the issuing of the actual payroll checks. Then we have the assertion of accuracy of payroll transaction. So we want the accuracy of payroll transaction. Primary issue is that the employee's gross pay and payroll deductions are determined correctly. Now, accuracy, note that within payroll can be a bit complicated now these days because unlike other transactions where you basically just pay, it's a two journal entry, two account type transaction. Of course, normally when you pay the utility bill, cash goes down and the expense goes up, right? You debit the expense and you credit cash. When you do payroll, now we have all these withholdings and laws that are put in place, and it can be a bit complex to consider these different laws. We have federal income tax, Social Security, Medicare, just on the federal level in the U.S. Then we could have state taxes. We could have other types of items that need to be withheld. Those withholdings need to be properly calculated and taken out of each individual check. So it's not just the factor that it's complicated in general, but it's the factor, the detail that needs to be put in place, that this proper withholdings need to be done on an employee by employee level. Also, there could be a great number of variations in terms of, how many states or state taxes, if we're in multiple different states, and different types of compensation if we're salaried employees, if they're hourly employees, and if they have any kind of other items that are going to be involved. And then you put in the factor of benefits that will be involved, other types of benefits, retirement plans. Then you can see the payroll transactions actually get quite complex. So when we think about the accuracy, we want to basically go through and make sure that the calculations of all these type of items are tying out correctly. And we can use various basically techniques to consider the accuracy of the payroll process. Classification, the assertion of classification of payroll transactions. In the event that the payroll expense is charged to the wrong account, the financial statements would be misstated. So it could be misstated if of course, we charge the payroll expense to the wrong account. Payroll expenses need to be properly classified between direct and indirect labor, inventory, and cost of goods sold. Now note, obviously, if we're in a service company and the payroll is all basically payroll, we might be breaking it out between officers or salaried employees and non-salaried employees such as that, and the mischaracterization or classification is concerning, but not too complicated. If, however, we are in the production process, we make things, then the payroll might be not only allocated to an expense, but things like inventory. It might be in the production process and not be expensed until we sell the inventory in the format of cost of goods sold. Then we need to consider, when we process the payroll, direct labor, indirect labor, those things that would be included in part of the production process. And that can be really confusing to people that don't, deal with the production process a lot, because then the payroll, this can get kind of messy, because we would expect to see it as an expense, but it's not going to be an expense typically. If we're allocating that payroll to the production process, it's going to be allocated to inventory, and we're going to have to make sure that the proper allocation is put in place, classifying these employees in the proper classification, and then recording these different types of expenses as should be happening. Meaning, obviously period costs, people that work in the office would be having payroll expenses. People that work on the production of inventory would either be directly working on the inventory or indirectly working on it. And therefore, in one way or another, it should be included in the cost of the inventory, the asset, and then expensed in the format of cost of goods sold. And then we have the assertion of presentation of payroll transactions. So presentation, tests of controls around management's use of the chart of accounts, correct codes for recording payroll transactions, and the financial reporting process that includes the use of a disclosure checklist. If the results of the test of control support the planned level of control risk, so after we test the controls then, if the results of the test of control support the planned level of control risk, so we set the plan level, we did the test of controls, our test of controls then support our planned level, then the auditor conducts substantive procedures and payroll-related accounts at the assessed level. So again, we plan for it, we set the control risk, and then we already planned what we're going to do from that point in time. If the results of the test of control support what we had planned, the auditor conducts the substantive tests. The next step, we go to the substantive testing, the actual kind of more detailed type of testing, and we've got to go actually dig in, go out to the customer or the client or the company as the auditor and start digging into documentation and whatnot. That's the substantive testing. The next procedure, and payroll-related accounts, we're gonna go and test them at the assertion level. However, if the rates do not support the level of control risk, so we test the controls and we say that it's not in what we expected the planned level to be, then the nature and extent of substantive testing must be increased. And again, it's easy for us to kind of think about that, or it should be getting more easy to kind of think about the relationship in terms of controls and substantive testing, in that if the controls are strong, we can do less substantive testing because we're relying on it. If the controls are weak, then we have to do more substantive testing because we can't rely on it. You also want to think of it in terms of the risk factors, though, because that can be a little bit more confusing. So remember, we're thinking inherent risk, control risk. We're going to use those risks to determine how we're going to set the detection risk. And the detection risk is going to be related to the substantive testing, how much basically how much substantive testing do we need to do. So usually if we're thinking about the control risk, then the control risk, if we say the control risk is good, we can rely on the controls, then the control risk, the risk that the control set up by management to detect a material misstatement, the risk that a misstatement is there that's not going to be caught by the controls that were set up by management. If the controls are good, then we're going to say the control risk is low because the controls are good. The controls are good, therefore the control risk is low. And that means that we are going to do, as the auditor, possibly less substantive testing because the control risk is low because the controls are strong. And therefore, we're going to set the detection risk as high, meaning the detection risk, the risk that we as the auditor don't catch a material misstatement with basically substantive testing, you can think of, is high because we set it high because we're depending on the internal controls and therefore we're doing less substantive testing. If, on the other hand, we're saying that the controls are weak, we can't depend on the controls, then we're going to set the control risk as high, meaning it's a high risk that the controls being set up by management are not going to detect a material misstatement. And therefore, we as the auditor are going to set the detection risk, the risk that we in our audit substantive testing will not catch the material misstatement. We're going to set that as low, meaning if we set the detection risk as low, that means that our audit procedures have to be the thing that's going to catch the material misstatement. We need to do more of them. We're going to do more audit procedures, more substantive testing.